guys, welcome to Conversations with the Real Estate Redhead. Today we've got Davy. No, this is Jonathan.
That's not my name.
We've got Davy Tyler
okay.
here. We've got Jonathan Peters here, and we've got a fun one for you today, talking about different things with mortgages and all of that. So stay tuned and enjoy.
All right. Let's see. I am a human. I am a human being.
For starters, yeah.
Yes. Just in case you were wondering. No, my name is Davy Tyler. I am a mortgage lender.
Okay.
My name's Jonathan Peters. I'm also a mortgage lender. Davey and I work together. We've worked together for about 5 years now. We've been friends for 73,000.
Oh, wow. You went way higher than I did. I thought I was really overshooting with 1,000. I was like...
No, I had a 73 exit.
You went for 73, and I was like, 1,000. No, he's 73,000. Like, whoa. All right.
Yeah.
So tell me something. So I don't know this. So whenever I work with Davy, am I also working with Jonathan?
Yes.
Always. He's the silent partner in the background.
So I don't have
so silent.
I don't have to send people to Jonathan only or Davy only. When I send one to one, they go to both.
That's correct.
Okay, good. Because
Exactly
that's a dilemma that I have all the time. I'm like, okay, well, here are my people, but I don't know who you're gonna call.
No, but it works out well because they say send 3 people, right?
Exactly.
So you can send Davey, John, and then some third guy.
Yeah, some third guy that
Or lady,
doesn't
whatever.
matter, right?
That's perfect.
Right. Okay. Cool.
Works out good.
Yeah, I like
But,
that.
Yeah, John is my Sheldon, so that's how it works.
And then who are
That's
you to
fair.
him?
Oh, crud.
Wow.
I guess I'd be Leonard.
Is that I don't know. I think
I was
you're a little
thinking
more
more.
outgoing than Leonard.
I was thinking more Pinky.
Pinky.
Yeah,
Who's Pinky on the show?
Pinky in the brain. I'm just
Oh.
changing characters.
Yeah.
Yeah, you can't just switch the whole genre there.
Yeah. Well, unfortunately, I don't
I'm
know.
Sheldon. I can do
I
whatever
don't
I,
know the
want.
reference, so. I mean, you're not wrong.
Wait, you don't know the reference? You don't know Pinky in the brain?
No, I know what it is, but I don't know what it is.
It's time
I can
for
visualize it.
Animaniacs.
Nope, different one.
That's part of Animaniacs.
I was, I guess.
Yeah.
Then it got its own show.
It was.
So we both don't know is what's happening.
Pinky in the Brain was just one of the shows within the Animaniacs.
But Pinky in the Brain had its own 30-minute sitcom show.
No,
And I don't even know what Animaniacs are.
that did not happen.
So, yeah, here we are.
Welcome to Davy and John Are Old.
So what are we going to talk about today?
We thought it would be good to discuss the basic knowledge that folks should have when it comes to buying a house.
Yeah.
Because we've talked about that in the past. There are so many clients that we deal with that the whole process is absolutely foreign to them.
Yeah.
They are unaware of what steps should be taken in order to be ready for the process.
Mm-hmm.
So that way, by the time they come to us, a lot of times there's things we're going to need to adjust or inform them about to get them ready for the process.
Yeah.
I feel like this information should be taught in high school.
Oh, it's
Yeah.
ridiculous how much of home economics is no longer taught to teach people how to be, functional and successful.
Yeah, exactly. Well, and I think, too, so many people think that they need to do X, Y, and Z. In reality, they need to go to y'all first, and y'all can tell them that they don't need to do those things, but they need to redirect those efforts in a different direction, right?
One of our favorite things is, we've been working on our credit. We just paid off all of our collections.
Yeah.
Yep.
And
It
then
doesn't work.
Yeah,
that way.
but how much money do you have in savings? Well, how are you going to pay for the inspection? Well, what about your down payment, right? There's people just don't understand that it's 1 + 1. You know what I mean? And people think that they need to do other things. So what does that look like?
So, I mean, in all honesty, the way we look at it is, life is a game. Everything is a game. You just got to learn the rules.
Okay.
And same thing with the mortgage, learn the rules.
Yeah.
Credit, same thing. You just got to learn the rules. Now, credit is one of those weird ones where the rules are funky.
Yeah.
Those are some funky rules they have because you would think, hey, pay off this collection. Logically, you would think my credit will go up. Mm-hmm. And 9 times out of 10, it either just stays the same. Sometimes it'll actually go down from paying off a collection.
Weird.
So,
Okay.
so what happens is when you pay off a collection, if it's an old collection that's 3 or 4 years old, it's no longer doing damage. It's just sitting there, but it's not affecting the score. But if you pay it,
Okay.
now all of a sudden it updates it and it says date last active, which is the date that it's paid. So now it looks like a new collection.
Oh, wow.
So it hurts it again.
What's an example of a collection then?
A collection is something that's gone that you haven't paid, and then it goes to a collections agency and they try and collect on it. Once it's at that point, sometimes if it's real recent, paying it off will help, but a lot of times it's going to hurt.
Gotcha.
So if
that's
you
interesting. So
walk
that's
away
like,
from AT&T or something, and
like an outstanding bill
yeah,
that you don't pay over time.
correct.
Wow.
So, I mean, when it comes to some of the basic knowledge, I think credit is definitely one of the main factors that people need to focus on.
Yeah.
Early on, to where they need to understand how credit works and understand some of the certain rules that are on how the credit bureaus are weighing your credit worthiness.
Yeah.
And one of them is revolving credit. So a lot of people are scared of credit cards. Credit cards have a horrible stigma to them. But the thing is, if you learn how to use credit cards, they are the greatest thing out there.
Yeah.
And one of the things that I always try to let folks know is, okay, when you're using a credit card in the beginning, when you're building up your credit, you don't want to max out that card.
Yeah.
You got a $300 limit on that card, you only want to utilize 10% of that credit limit.
Wow. Okay.
So if you only got a $300 limit, that balance really should not go above $30.
Okay.
That's your safe range. Of course, if you go a little bit over, I mean, it's not going to hurt the credit that much, but try to stay within that 10% range.
And then it's important to pay it off every month or
if you can,
keep it down?
Because in all honesty, I know in the past it used to, I think, not help as much if you were not letting a balance ride on the card.
Yeah.
I'm pretty sure now you're incentivized to pay it off every month. But at least that way, if you're paying it off every month, the balance is still getting reported to the credit bureaus.
Okay.
2, you're not paying interest on it. So
right.
It's not costing you anything to build that credit.
Okay.
And then eventually, as time goes on, you keep doing that and showing your ability to repay it, that credit limit keeps increasing, right? So that credit limit it starts increasing high enough to where now you can make all of your purchases with your credit card. Okay. Everything that you were going to buy, your groceries, your gas, everything you were going to have to buy anyways, now you can buy it with your credit card.
Okay.
And the reason
What's cool about credit cards?
What is that?
Points.
Yes,
and rewards. Because these people don't realize these credit card companies get paid every single time you swipe that card. Those merchants have their POS system that is
that's point of sales.
Thank you for the clarification.
Just wanted everybody to know.
I was wondering what that stood for. I was like, huh?
So they have their merchant services through it to where they have to pay a percentage to the credit card companies for everybody using their credit cards to buy something.
And so this is the merchant. This is like H-E-B or Walmart.
Yep.
Correct.
Every gas station, every place that you go. That's why you'll see some places that are small that are going to that'll tell you, hey, we're going to charge you a convenience fee.
Yeah.
That convenience fee is that percentage that they're having to pay to the credit card company for using the machine.
Gotcha. Or a $5 minimum or whatever at the donut shop or whatever. Yeah.
Because they're having to pay. It's charging them every single time you swipe your card. Okay. So those credit card companies want you to swipe their card as much as possible. So they're going to pay you now.
Wow.
Either reward points or cash back, flyer miles, something. You're getting something for it. So if you can get to that point, now you're buying everything with your credit card. Now you're getting something back for what you were going to purchase anyways. So if you bought it on your debit card, you bought it cash, you got nothing.
Okay.
Now if you buy it with your credit card, you got something back for the same stuff you're going to buy. If you pay it off every month, you're not paying any interest. And then on top of it, you're also keeping your credit looking great.
Yeah.
And the last thing is it's safer. It's safer to do it that way. So if you think about when you're out there buying stuff, if you're using your debit card all the time, whichever card you're using, that's the card that is basically either it's floating, that number's floating out there more.
Yeah.
Right? So you have more likelihood of fraud happening on whichever card you use the most.
Yeah.
So if fraud happens on your debit card, that's your actual money.
Right.
That's your funds. So if you're stuck in a fraud claim and you got bills to pay, well, that money's tied up.
Yeah.
You got to wait till that investigation's done for you to get your money back. That could cause a whole lot of issues just in your day-to-day life. Now, if you do it on the credit card, cool. Hey, You guys handle that. I still got my money.
Exactly.
And it's just a much safer situation. So I overall, I will promote credit usage all day long if you do it right.
And so paying it timely, not missing a payment.
Yes.
Absolutely
That's
not.
essential.
You cannot miss a payment.
Cannot miss a payment. And then...
Also, to add to what Davy said, I know you said it, but I want to hit on it more. You can't just start buying everything with your credit card right away. You really have to establish your credit so that you've got a large enough credit line that, if you've got a $10,000 credit limit, now you're spending $2,000 a month with your credit card.
Yeah.
You don't want it to be above that 30% mark.
Okay.
Exactly.
Yeah. Because what we did one time, we were moving and I was really excited to move. So I packed everything and then I couldn't cook. And so we went out for dinner for 10 days straight and we put it all on our credit card because I'm like, oh yeah, points. This is great. Well, then 6 months later, and it was a 0%. So I didn't pay it all off immediately. And then 6 months later, we were looking into buying a house, whatever. We're established and where we were living. And then they were like, oh, yeah, your credit score is not that great. And I'm like, but what are you talking about? And so I guess I was higher on the limit than I should have been or whatever the limit was. I don't remember what it was now. I guess my credit card utilization was too high.
Yes.
So he was like, oh, yeah, you need to pay this down and, and then you'll be good to go or whatever. So that's something else that people can do, right? When they come to y'all, if you see that their credit score isn't where it could be or they'll get a better rate if they did something else, y'all guys can work to repair credit.
Okay. We're by all means not credit repair folks. That's not our title, but it is something that we like to look into to help guide them in the right direction on exactly where to direct their efforts.
Right. Okay.
So we have credit simulators that we take a look at that help us determine what's going to be the best path for them and how long that path is going to take.
Mm-hmm.
So, but yes, we're not credit repair company or anything like that.
But
we also really don't like them.
No,
because
really
they typically, they charge you monthly.
Credit repair companies?
Right.
Okay.
They're going to say, every month that you subscribe to us, it's $150 and we're going to get your credit fixed. Now, what are they doing? They're disincentivized to do their jobs in a timely manner.
Yeah.
Because they keep getting paid the longer it takes.
Oh, my goodness.
So,
well, and that's a lot of money to have to pay when you're already trying to get your debt in order as well.
So somebody has to be in a pretty sticky situation for us to recommend usage of a company like that.
Yeah. But y'all guys have the technology available to where you can just say, hey, work on this and this will help or whatever.
And
That's
one
awesome.
of those things that, and maybe it's a little forward of us to say we really don't like all credit repair companies. At least it's just the ones that we've dealt with.
Yeah.
The ones that we've seen so far.
Yeah.
So there could be some out there that actually know what they're doing. We just haven't run across them yet. The ones that we've seen so far, their plan of action is they dispute everything on the credit reports.
Really?
So if you're disputing everything on the credit report, people don't realize exactly what that does. Mm-hmm. So when you put a dispute on your credit report, it removes it for the time being while it's being investigated.
Okay.
So they've got a certain amount of time. The company that you're putting the dispute on has a certain time frame to gather documentation to prove that is your debt.
Mm-hmm.
And 9 times out of 10, they will. They will find something that shows your name. It's extremely hard to prove that it's not yours.
Yeah.
So, because obviously they put it on your credit report, so they've got something there that ties it to you. So, in that time frame, it's like that collection is not there on your credit report. So it can alter your score. So when these credit repair companies, they'll go through and they'll just dispute everything negative on your credit, right? Mm-hmm. And when they dispute everything negative, you're going to look at your credit score, and all of a sudden it's going to just jump up.
Yeah.
Like, all right, this is
working.
No, it's not.
As soon as those disputes start getting resolved, bam, just that score just goes right back to where it was.
And then what are you even paying for them to help you with then?
See, so that's the thing.
Yeah.
At least the ones that we've seen, it doesn't do anything positive. And the big issue is they'll be working on, they'll see that score come up. And they'll go, all right, we're ready to get a mortgage.
Yeah.
And so they apply with us.
Yeah.
Well, when you apply for a mortgage, here's one of those things that people need to know. You cannot have those disputes on your credit.
Okay.
Those disputes have to be removed because of the fact that it is artificially altering the score.
Okay.
So if it's doing that, then obviously we're not seeing the true score. And as soon as those disputes are removed, all of a sudden they don't qualify.
Wow.
So.
And not all the disputes have to be removed, but most of them do. It's a
Yeah.
kind of a tricky thing that we have to look at, but
So good rule of thumb, don't have disputes on there.
good rule of thumb is just
Try
don't
not
have
to do
any
that.
disputes.
Right. Right.
Otherwise,
So-
you're going to need Sheldon to jump in and figure out if it's okay or not.
Yep.
What's the next step? So credit card utilization is good to try and build your credit, right?
Yeah, because I think early on they should teach them how the credit works. But credit utilization is one of the main factors when building credit that weighs the heaviest.
Okay.
And you got to think there's different types of credit they can have. So you can have revolving credit or installment credit. So you got your revolving credit, you're like your credit cards. Installment credit, you're like your car loans, personal loans.
Okay.
And if you're looking at it, the reason credit cards help so much in building your credit is there's more information that can be gathered from it. So if you think about a car loan, you make your payment, and did you make it on time?
Yeah, and that's
I mean,
it.
That's about it. There's not a whole lot more information to gather from that. And also, it's only for a certain time frame. So however long the note's for, I mean, that's as long as that's open.
Right.
Versus a credit card is open. It's an open revolving line that can stay open for as long as you need it.
Okay.
So, and then they're able to see, did you make your payment? Did you make it on time? How's your credit utilization look? You know, how are you using this card? Are you maxing it out all the time?
Right.
Are you paying more than we ask you to?
Exactly.
Interesting. More than the minimum payment? Is that what you mean?
Right.
That has an effect on it? Oh my goodness.
See, so there's just a lot more information to gather. That's why revolving credit is so important. And if, let's say, if they were teaching this in high school, then they could start building that credit early, but building it correctly.
And building
Not going
it
like,
wise.
hey man, here's your first credit card. They have no idea what to do with it, and they just start buying everything because they're like,
Exactly.
I don't have to pay it till later. Sweet.
PS5s for everybody.
And I only have to make a minimum payment of $35 for the rest of my life.
Going out to dinner
I
for
could do
every
that.
meal.
You know, and
All the
that's what
things.
gets everybody in trouble.
Yeah.
Is they have no idea what to do with these cards when they get it.
Yeah.
Now, if the rules were stated out for them in the beginning, and they go, hey, we're going to teach you how to get
Yeah.
a credit card, how to use it, and use it properly.
And what it means, yeah.
Then, I mean, it could put people in a much better position. But yes, it does require discipline.
See, I'm afraid about when they actually do start teaching it in class, because what they're going to do is they're going to have reps from like Visa coming in, trying to
Seriously,
sign
though.
kids up.
Trying to
This is how you
sell
use a credit
everything.
card. Blah, blah, blah.
Exactly.
You know what's going to happen. I mean, they're doing it on airplanes.
They do.
Yeah, that's
And they make it sound real good.
Yeah. I'm like, you didn't disclose the proper information. I'm going to report you. This is a RESPA violation.
beard.
So-
Like rubbing it. I wonder if that's going to sound weird.
In the mic.
It looks weird. I'll tell you that. It definitely looks weird.
Oh my goodness gracious.
Okay, so so somebody's got, their credit built and everything, or they feel like they do. What's the next step? What do they need to do as soon as they think they want to buy a house?
Call us.
Call
Yes.
Call
a
Davy.
lender.
Call
Yes.
John.
Call Davy or John.
Yes, absolutely.
Oh, that's the only call you make.
All right, and why is it important for people to call right away?
Because we have a Sheldon. And Sheldon's cool.
Okay,
Well,
Jonathan.
I appreciate the compliment. I wasn't really fishing there.
But maybe.
But okay. No, so people, when they decide they want to buy a house,
Yeah.
they're going to get online. They're going to look at everything that's available. They're going to see, I can afford this much. But what they're not seeing is, that's with great credit and 20%
20% down and no taxes.
no MI. And yes, exactly.
Uh-huh.
So if you call a lender, we'll be able to really find out what you're qualified for, so that they're not, people aren't wasting their time getting excited about things that aren't necessarily in their price range. Also, we'll be an advocate for them and see if there are programs out there that they don't know about.
Excellent.
We just called a client yesterday and said, hey, have you thought about first-time home buyer down payment assistance program? And they said, my banker didn't even tell me that those existed.
Oh, wow.
Yeah. So, we're going to be out there trying to find the easiest way for people to get into houses.
Yeah.
Yes. And the thing is, this is another one of those things that people need to know, is you can shop around for a lender.
Yeah.
That is actually beneficial and recommended
Yeah.
for you to do. You can shop up to 4 lenders. It's one of your biggest purchases. And like John said, you know, that one banker did not even mention the down payment assistance programs.
Yeah.
There's a reason. The reason is there's less profit in doing those down payment assistance
Gotcha.
programs. So you may have some lenders that, yes, it's in their arsenal. They could offer it, but they make more money if they don't offer it to you.
Gotcha.
So that's why I'm saying shop around, because if they know they're in competition with other possible lenders, they're going to have to come with their A game. They have
Right.
to bring their best stuff.
Right.
And that means whatever it takes in doing what's right for the client and not just what's best for their pocketbook.
Absolutely. So when someone is shopping for a rate or they're shopping for a lender, you're typically the rate's going to be what it is, right? It's basically like what does it mean whenever somebody can go shop for 4 lenders? That means that they can have their credit run 4 times in the
Yes.
application process and it not affect them?
Exactly. So what will happen is they have a certain time frame to be able to shop for those 4 lenders. And what the credit bureaus will do, this applies the same as when you're shopping for a car. They will take all those inquiries, lump them together, and count it as one.
Excellent.
Now you're not just getting dinged on your credit
Right.
every single time.
And that depends on the car dealership too. I did go to one that did it like 35 times, so
Okay,
that
yeah.
hurt.
Oh,
Yeah.
that's really
Some
unfortunate.
of them
Yeah.
are a little ridiculous. That's car dealers, not us.
Yeah.
Right. So when we pull your credit, we're the company that's pulling your credit. So if you go shop for a car, you know, they're not the bank. They're
Right.
going to try and find a bank that can
Gotcha.
get everything taken care of. So we pull the credit, we look at the credit and figure out, you know, what the next path is, or what the next step is rather. The reason to apply early is because if we can find something that's going to increase your credit score and help you to be in a better purchasing position sooner,
Yeah.
you know, then we're going to try and make you, you know, do that so you can achieve it. And when you're ready to purchase a house, you know, save you money in terms of
Gotcha.
interest rate, fees, things like that.
Cool. Yeah. Like that's what one of my clients is doing right now. She called you guys and y'all said, hey, you probably should get some credit. And so that's what she's working on right now. Which is why I really recommend. I mean, I'm always like, okay, y'all need to come. You need to find a realtor you trust, and then let them point you in the direction of lenders that they trust. Because you can get on Google all you want, but that's not necessarily going to help. You know.
Google reviews nowadays are just more just where the angry people go.
Yeah.
You never see the good stuff anymore.
Yeah. Yeah. It's tough.
I don't know. Sometimes there's some fun reviews to read.
Yeah.
Oh, Davey
That
bought a
beach ball
hat.
one. Oh yeah. I'm not gonna. Yeah, no joke. I've bought certain things just because of the review. I had to, you know.
Because the review was so bad, you
No.
needed to
No,
see if it was
okay.
true.
So for one, I know we're going like on a tangent here, but there was this beanie that I saw on Amazon. And this beanie, I mean, it just looked like a beanie. But when the first review was like this paragraph, and this guy was like, dude, this hat is so soft. It's like 1,000 baby bunnies just nestling your head. And you just like, buy it now, you know? And it was so lengthy and so descriptive. And I was like, I mean, 1,000 baby bunnies? Like, I've got to know what that feels like.
Yeah.
So I bought it. I mean, it didn't feel like 1,000 baby bunnies. It felt like maybe like one unbathed bunny.
Oh no.
It's like,
You also bought it in summer.
yes.
Yeah, that's a thing.
And it ended up like really like I think you had to have a lot more hair to fit in that hat. Like there was
Gotcha.
a lot of extra room at the top. Like you could like it sat like looked like one of them gnome hats.
Oh my
It was like
goodness.
super tall.
It was made for the cone heads.
Yes.
Yeah, there you
For
go.
sure. That one didn't work out so good for me. Let's see. I bought a robe. It was a robe, right? What the heck would I buy? I think it was a robe.
You mean you don't know what he buys on Amazon?
Yeah.
I mean, come
Oh
on.
yeah, I did. It was a robe because it said this robe will hold you like your mama never did. And I was like, I want to know.
Yeah.
So I
You
bought
had a
it.
very loving mother. You have a very loving mother. I'm sure that she
Yes.
held you in a like how you want it to be aggressive and painful.
Mom. I have an Asian mom. There wasn't like hugging. It was like, good boy, do more math homework. You know,
Hey, but it
play
worked out
more
well.
piano. Like, that's what that was like. So yes, but no, that one worked.
Well, I mean, have
that
y'all ever
robe was
seen?
fantastic.
Have you ever seen the reviews where they're like, "This company sucks. This company's the worst," and then the company will come and respond, "Sorry, you had a bad experience." Like it's always like this so awkward. It's like trying to resolve it on the back end, and it's like just no, it's not working for you.
Yeah.
Yeah. Yeah.
But
That's
yes,
the thing.
I'm a sucker for reviews. Those are funny. I think John sent me the funniest one. It was like a beach ball, like one of them giant beach balls.
Oh yeah. Yeah, that was a good one.
That was a good one. Like this guy went on this whole spiel, like it was like a story of like this beach ball and how it was basically just.
When he says giant, it had a 15-foot diameter, I believe.
Oh
huge,
my
massive
goodness.
beach ball, and they were talking about how this beach ball was like flying down the beach, just taking folks out left and right. And then the greatest part is the review got added onto by other people, and they're like, "Yeah, I think I saw it, going down the beaches of Georgia."
Like this novel. Attack of the Giant Beach Ball.
Then it started turning into like sightings as far as like the reviews go.
It's so awesome.
Just saw it on the Florida coast.
Yeah. Well, nowadays people can pay for someone to give a review. Like they'll send somebody a product for free so that they'll go online and they'll review it.
Oh yeah.
But
definitely.
It's always like if somebody tells me like, "Hey, I just bought this and it was amazing," it's always going to go so much farther than some stranger online telling me. So it's no different than, whenever you have somebody that you trust telling you.
Right.
Versus something else. So
Good times.
Yeah.
Buying stuff on Amazon.
But honestly, I do rely on the reviews for like so many things. And my husband's always like, "Oh, this restaurant has like 3.5 reviews on Yelp out of like 3,000, so it must be really good." And I'm like, "Sure, fine, whatever." But reviews for restaurants definitely go pretty far for me.
I feel you on that. I do. I look at reviews for anything I buy.
Yeah, I mean,
Kind of gives me a heads up.
Yeah, it does. It does.
Like, hey, if you buy this shirt, 20 people said order one size up. So if I got the right, if I
So
get a medium, I just ordered.
size
I know
up.
where you were going with that. A review for a shirt. Hey, this shirt covers you. It does its job. It has 4
covers
holes.
you.
Great job.
Okay, I had to count
I had to
that
count how
out
many holes a shirt had. I'm like, wait, what?
No, that's right. 4. All right.
4 openings.
That's correct.
Yeah.
Able to fit a human.
Yeah. Most humans.
Speaking of humans, what is a first-time home buyer in the state of Texas?
A human. Dogs
I
cannot
have a feeling.
purchase
I have a
homes.
feeling this is a trick question.
What do you think of first-time home buyers?
Somebody who has not purchased a home before.
That's
In
what
the
most people think.
In the last 3 years.
In the last 3 years.
So
If you haven't had home ownership in the last 3 years, you're considered a first-time home buyer in the state of Texas.
Oh, cool. Okay. That's a neat fact. But I can't be like living in my house that I own and purchase another. I can't be living in the house that I own for 3+ years and then purchase another one as a first-time home buyer.
Correct.
Yeah, that's lame.
So that's good stuff.
That is good.
But let's see. I'm trying to think of what else I was trying. Like, if I were teaching a class in high school, like, dude, this is what you guys need to know about trying to buy a house in the future. Mm-hmm. Okay, so we hit the credit. That's one. That's a big one.
Down payment requirements.
Yes. So 2 is down payment and closing costs.
Yeah.
So like, what are your costs going into a mortgage? Because most people do know about the down payment.
Yeah.
They have at least some sort of idea that a down payment is required.
Yeah.
They don't typically know how much,
Mm-hmm.
but they have an idea that, okay, I just need enough, save up enough for a down payment.
Yeah.
They have no idea that there's this whole other side that's closing costs.
That was totally me buying my first house.
So I think that's extremely important in understanding that, yes, 3.5% down for FHA, 3% down for conventional if you're a first-time home buyer, 5% if you're not. But that down payment portion there, I think is important. I don't think it's important that they understand exactly the exact percentages for each loan type.
Yeah.
That their loan officer will help with that.
Yeah.
I think they do need to understand, though, that whatever the down payment is, if they're not putting at least 20% down, they're paying mortgage insurance.
Right.
Unless you're a veteran using a VA loan.
Okay.
Exactly.
Yeah.
That was a good one.
Well, and I feel like mortgage insurance, I mean, a lot of people don't mind the 20%. A lot of people can swing that. But people that are younger, that are my age, don't really have the ability to put 20% down. You know, and so I feel like the mortgage insurance is just part of the payment. It's like kind of like taxes and insurance. It's like just tack it on there. Who cares? I got to do it anyway, you
Right.
know.
It's basically, in the way that I'm looking at it, is a way to hedge against risk and artificially inflate the interest rate to a higher amount that will eventually fall off once there's less risk because the collateral is now at a higher staking value.
Right. That was a very high level way to explain that. I'm like, wait, what are you talking about for a second?
That's why he's Sheldon.
The collateral.
Sorry.
Okay, the collateral is the principal.
State.
like what exactly is that? Yeah. So that's very true. Yeah. What were we talking about? I'm sorry, I got distracted.
Oh, the down payment and then closing costs.
Yes, closing
it's
costs.
It's important to know what goes into closing costs.
So what percentage would you tell someone? Like, okay, well, these are going to be, this is going to be your down payment, but what about your closing costs?
We don't say a percentage because we care.
Okay.
So, I mean, and see, that's the thing, because it's different depending on where you go. So, because I think it's important that they understand what makes up the closing costs.
Right.
So your closing costs are comprised of 3 categories. So you've got your lender fees, your title fees, and your escrow.
Okay.
So those 3 portions make up those closing costs. So your lender fees, the reason we don't give a percentage on how much closing costs are, because like for us, ours are a flat fee.
Gotcha.
So it doesn't matter if you buy a $400,000 home, our fees are the same.
Cool.
Now, you go with another lender that charges an origination. That's a percentage of the loan amount.
Yeah.
So all of a sudden, that $400,000 house, well, those closing costs just went up exponentially.
Yes.
Because those lender fees just went up crazy amounts.
Right.
So that part is a little bit harder to gauge, but I think it is good to look for one that's why it's good to shop around.
Yeah.
Hey, we may give you a really good rate, but we're gonna get you on the back end.
Exactly.
So it's good to look at a loan estimate. That's where you're gonna be able to compare.
So do you get a loan estimate when you get your pre-qual or your pre-qualification letter or anything like that? Like,
that's kind of the tricky part. When you get your pre-qualification letter, you can ask, for an itemized fee worksheet. A loan estimate typically can only be given out once you're under contract.
Yeah, and you know what the amount's going to be and all of that.
Right. The itemized fee worksheet, the tolerances and the errors for what the fees are, there's really no rules. Now, a loan estimate, there are rules. Certain fees have to be spot on. Certain fees are allowed to have a 10% variance.
Okay.
So realistically, what you should do is get a loan estimate and try and get anybody that you're talking to in terms of lenders to also send you a loan estimate on the same day. So you can compare their rate at the same day and look at all their fees.
Excellent.
Yep,
because if you get a rate on Monday from one company and a rate on Wednesday from another company, the market could have shifted and you could be missing out.
Right. Absolutely. Okay.
So those are good to look at. And then 2, when you're looking at the fees, so 1, you'd be looking at their actual the lender fees and how they're charging theirs, whether they're doing an origination or it's a flat fee. 2, you'd be looking at the escrow portion. So you could, if you just look at the lump sum, they could be completely different. One could be way larger than the other.
Right.
But one could be actually collecting the right amount of months of taxes for the escrow, and one could be shorting you. Which means later down the line, when you're making your monthly payment, all of a sudden you're going to get a letter that says, hey, either you give us thousands of dollars or to fill your escrow account because it's short, or your payment is shooting up.
Yep.
And
a little good old love letter from the lender.
Those are scary, and that falls back on the lender in the beginning process, making sure that they fill up that escrow account properly and doing their due diligence. Now, a lot of them will say, hey, we'll short the account. Your closing costs are less.
Your monthly payment is less. Yay.
And then later down the line, you're like, wow, okay. This sucks.
Yeah.
This is not what I was promised.
So so I feel like what I've done in the past, I've got a loan calculator on my phone, and so I've just had it on my phone since I think we bought our first house. But I would take like whatever my quote is for my insurance and whatever the taxes say on there, and I would add them up and divide it by 12. Obviously I'm not going to have that other, what is it? The mortgage insurance. But that would still help me to kind of circumvent that from happening, right? Like to help stop that from happening. You think?
Yeah, well, that'll help, and it's good to be educated that way and understand all the different pieces that are going into your payment.
Yeah.
So.
Yeah. It's not always what it seems in face value, really.
Right. I mean, it's important to have somebody that you trust that's going to be able to read the loan estimates to you, because kind of confusing forms, especially if you don't deal
Yeah.
with them every day.
Yeah.
We had a client that was refinancing, and they got a quote from another company and sent it to me, and they said, we really like you guys. You guys are great, but it's going to cost us $8,000 less to go with this other company. And I looked at it, and I was like, they're not collecting for any insurance or taxes.
Yeah.
So we're really $4,000 cheaper
Oh my goodness.
because you're going to have to pay $16,000 from them overall
Wow.
when they correct the escrows.
Wow. Can you imagine what that would do to a monthly payment and how much money you would have to come up with? That's awful.
Crazy.
Oh my gosh, that's disgusting. Yeah, that's bad.
And when it comes to that, because they will see, like when you're comparing them. So like I said, you've got your lender fees, your title fees, and the escrow. That escrow is obviously the taxes and insurance that we're collecting.
Yeah.
And what I think people really need to understand is, because they see that closing costs and part of it is their escrow.
Yeah.
They need to understand that that's their money. That is still their money. So all that is happening is, so if we're collecting, let's say, $5,000 at closing for your escrow account, that's still your money. Even though you're giving it at closing and it's not in your bank account right now, I mean, the bank is holding on to it for you.
Right.
And putting it in that escrow account and using that account to pay your taxes and insurance, each year.
Yeah.
But if you sell the house or you refinance the house, you get that money back.
Of what's not
'Cause
used.
it is yours.
Yeah.
And so I think if people understood that more, when it comes to paying their closing costs, that portion of it may not seem as scary,
Yeah.
because you're basically just handing this money over going, hey, the bank will hold on to it to make sure my stuff is getting paid, but it's still mine.
Yeah.
Still your money.
Yeah. That's a very good point.
So, but yes, those are the different pieces of closing costs.
Of closing cost. Yay. So what's so we've talked about debt. We've talked about, what did we call number 2?
Applying, I guess.
Applying and coming to y'all. We've been all over the
talking
place.
to a lender.
I don't know.
Talking to a lender.
But how should somebody apply if they wanted to get a quote, Davey?
We write mortgages.
.com.
There we go. Stop, you can't use that. That's somebody else's.
I did it quietly. That helps, right?
Did it quietly, very close to the mic. Do you know how microphones work? It's just a whisper. All right, yeah. So you can go to wewritemortgages.com.
Yeah.
And you'll see Davy's face, and
Excellent.
they can apply right there.
Awesome. And that goes to Jonathan and Davy.
Right.
It does.
Awesome.
It's good stuff. We
Yeah.
write mortgages. Oh yeah.
So the best place to go is to go online and then to call y'all, or call y'all first and go online, or go online, y'all call them. What's
Yes,
that?
either way. But regardless, before we start reviewing the application, we do like to have a discussion. We want to have a discussion with the client, because we want to. It's really important to understand what their goals are.
Exactly.
Yeah.
Because
And that sounds silly to say, because you would think, oh, their goal is to buy a house.
But it's not necessarily that straightforward.
Well, it's more than that, because yes, their goal is to have somewhere to live, but what's beyond that? Are they going to be putting their kids in college soon? So,
Yeah.
are they going to be living here for 3 years? Is this going to be a 10-year home? We need to figure out what purpose that home serves for them,
Okay.
and also what their near financial goals are, so that we can make sure that we don't put them in a program that's going to harm their other financial goals.
Okay.
Exactly. So, I mean, like, for example, let's say you have a client that is buying a house. Let's say they have excellent credit. They have excellent credit, and when we're talking to them, let's say they do qualify for the down payment assistance program.
Yeah.
But let's say they have enough funds that they could make the down payment on their own. Now, something we'll want to discuss with them is, how long do you guys plan on living in this house? If you plan on staying in the house for an extremely long time, then maybe the down payment assistance route is not going to be our best route. Maybe we want to look at conventional
Yeah.
and try to get that rate down even further, and because you're going to be staying in the house for a long time. Now, if you're going to be staying in the house for a short time, maybe the down payment assistance amount will be better, because the amount that you'll get from the down payment assistance, you won't recoup that savings in the time frame you would be by the time you'd be selling the house. So there's just a lot of different factors.
Okay.
So we want to make sure we're doing what's right for the client.
Yeah.
To fit their narrative,
Cool.
fit their story.
Cool. So
Or their
y'all will
goals, their
call
future
them
goals. That was a weird
Fit
narrative.
their
to fit their narrative.
It's because that's all we hear on the news every
Yeah,
day. Now, if any station you're listening to is,
Yeah.
oh, this is the narrative here.
Saying words.
Yeah.
Yes.
I don't know words.
But also to like make that make a little bit more sense, hopefully, to people who don't know about mortgages. Basically, what he's saying is, if you use a down payment assistance program, let's say they get $5,000 up front,
Yeah.
but the rate is a little bit higher on that than a regular one. So, say it costs an extra $50 a month to get that $5,000 up front. How many months do you have to be in that house before you've paid it all back, essentially,
Got
and
it.
then started losing money?
Got it.
So that's why you need to dig deeply into that.
Yeah.
Also, investors. A lot of investors say, I want a 15-year note. I want to, put 20% down, and that's great. Putting 20% down is great. But if you're investing, you don't necessarily want to have a 15-year note. Your payment's going to be lower, but it's going to increase your debt-to-income ratio,
Got it.
which means that you're going to have smaller purchasing power in the future.
Be
if you
able to
want
go
buy.
forward and buy more.
Right.
Yeah.
Because you've got a minimum payment that's higher.
Right.
So you can offset that by doing a 30-year and then just increasing your principal payment.
Yeah. Pay more if you want to.
Right.
Right. Instead of being obligated to pay more.
Exactly.
Got it.
You know what's going on.
Yes. Yes. I follow. Kind of.
So that's why we like to talk to them. So yes, you can definitely go and put the application in first, but we will be calling you
Cool.
and asking you questions.
I like that because it's very it makes it a personal, makes it more personal, helps to educate them. I'm all about educating people because it's a lot of times they think that they know something because it's what they've been told or it's what they've heard, and a lot of times that's not true. And y'all know the mortgage game changes a lot. The rules change all the time, as y'all as y'all tell us, and so it's good to always get a refresher and pick y'all's brain. That's what I always tell people. Just pick their brain. Just find out. That's what I did before we bought our first house. I called so many times. Different people all the time, asking, making sure that I knew what I was doing. So set yourself up for success.
100%.
That way. Yeah.
Oh yeah.
Cool. So are those basically what we need to know?
Well, we could do this for 7 or 8 more hours if you'd like.
Yeah. Well, we can keep it at 3. We can keep it at 3. Maybe we can save that for another podcast.
Yeah, we can go on and on. John and I, we definitely like to hop on our soapboxes. So
Nerd out a little bit when it comes to mortgages.
oh yeah,
Or all the things, kind
and
of.
then, yeah.
Yeah, all of the things.
We've done pretty good on not going off on that many tangents, though. I think we only had like one major tangent.
Yeah, and we kept it
You're
PG,
making a
right?
tangent about going off on a tangent.
I am, but it's less of a tangent.
Well, then let's wrap it up. So tell us where we can get in touch with y'all, how we can find y'all, and
You can find us at wewritemortgages.com. Davy's phone number is 361-523-1801. He prefers text messages between the hours of 12 a.m. and 4 a.m.
John's a jerk. You can also find us on Facebook. We do dumb videos.
yes, they do
Lots of 'em.
amazing videos. Y'all have to go
I thought
see.
we had a new website, like wedodumbvideos.com. I
I
didn't
know,
know
I was
that.
waiting for it.
No, we do dumb videos. Put them on Facebook so everybody can see them.
Interview with the house.
Oh,
Yes.
Yes, love
lately
it.
we've been doing open houses. Yesterday's video was the worst video ever.
So bad.
And y'all posted it. Was it live?
Oh, yeah. We always do them live.
Nice.
And usually we'll share it out. I did not share that one. That was just like that one. It's bad enough that it's out there and that people have watched it.
Oh no.
Davey
I just
lost
could
all
not-
of his words.
Hey, yeah.
He didn't have words.
There's a ceiling in
This house has a ceiling.
room
Nice.
with angles.
Yep.
It's good.
Buy
like,
this house.
wow.
It has a ceiling.
Right.
Yeah.
It was so not good. Oh, jeez. But anyways, yes, if you would like to see dumb videos of us, go to Facebook.
And how do we find you on
further
Facebook?
Scroll down. Oh, Davy Tyler.
Davy Tyler.
Davy.
Because I've tried finding
No
you on
E in
Facebook and
there.
I cannot. So is it only on
It's on
Davies?
me.
Okay.
Yeah.
Cool.
So actually no, you should be able to see him on John's page as well. So
Maybe I
Jonathan
just
Peters.
am not doing it right.
Yeah. So
Operator error.
Jonathan Peters. If you go to his page or you go to mine because we're both tagged in the videos.
Yeah.
Now here's the thing: if you go to our business page, that's where the real fun stuff is.
Why?
Well, if you go to the business page, or if you go and search us up on YouTube, So scared. Then you'll find the real videos.
The
like
YouTube.
you'll find where like it all started from, because like we didn't just start off doing live videos. Like it just progressed. Like we started off doing like these green screen videos that
nice.
Dressed up with props, and
we need to see these.
For Thanksgiving I made him a turkey.
Nice.
Yep, I was a turkey on a table. Gobble gobble.
Oh my goodness gracious.
Yep, just my little head bobbing around.
I need to find this.
Oh geez, these videos are the worst videos because we're not actors.
Yeah.
And you can so tell.
Oh no.
We're also not editors, and you can so tell.
It is. They are something, but yes, and at least we finally progressed.
So we can find you on YouTube. We can find you on Facebook.
Yes.
WeWriteMortgages.com.
That's correct.
Okay, and you gave his number
at 361-523-3675.
That one's mine.
See, you already said the awkward times to call me, so
call me during normal times.
During normal times, whatever you consider normal times.
That's horrible. Call him anyways. He's Sheldon. If you'd like to talk to Sheldon and know weird facts,
and no weird facts. If you're an analytical person,
he will teach you science.
Yes.
Okay.
So, Jonathan, what is one thing you do every day to make the world a better place?
I just try and be kind to people.
Yeah, that's a good one. What about you, Davy?
Wow.
Did he take yours?
Rewind.
Very heartwarming. No, that's messed up because I was gonna say the same thing. I was just gonna say basically just being genuine.
Yeah.
Being genuine to everybody and understanding that everybody that you're coming across has their own struggles that they're going through that you have no clue about.
Absolutely.
You know, everybody has their own story, and to understand anytime you hear anything that there's always two sides to every story. Right. Two sides to every story, so just not to be judgmental, be genuine.
Yeah, absolutely.
Everybody you come across.
I love that.
Because you have no idea the impact you have on certain people. It could be something, very small interaction that to them was a big deal.
Right.
Because you even think about from your own point of view, how many times something small happened, somebody went out of their way for something little, and to you it was a big deal.
Yeah.
And they probably just went on about their day. They were just being helpful, but to you it was, it actually meant something.
Right.
It came at the right time or whatever it was.
Right.
But,
that's cool.
That's important.
Yeah, everybody's always going through something,
What do you got, Callie?
Yeah, what about you?
I mean, do I have to say something?
Now you got to.
Yeah.
We're going around robin.
Mine is always to be kind, be genuine, you're right. Yeah, that's a good one. What else can I come up with? I guess try and smile as much as possible. So today I had to change shirts before I left the house because I got my breakfast on my shirt while I was on the phone with the client.
Did it only have 3 holes?
It actually had 4.
Okay.
And it was really
the review
cute.
Was
and
true.
So I had to go into my closet last minute. I had my client in my armpit in my phone, trying to talk to them on speaker. I had my phone in my armpit like this.
Oh, you said you had your client in your armpit.
I did, and I was like talking to them. I had my hands full, I'm always doing like 500 things at once.
Just throw your phone.
Threw my phone on the ground.
So anyways, yeah, so just go in stride. Don't let things affect you. I like it. Don't let things affect you and just move on. And things suck sometimes, like getting your breakfast on your shirt, but you just gotta push through it.
But at least you got to have breakfast.
I got to have breakfast. See, looking on the brighter side of things too.
See, there you go.
Yeah.
Ooh, one thing that John does, he makes sure to pick up litter. So the crazy part though is if you look at the inside of his car on the door, it's probably because literally he will see somebody throw something down, he'll go and grab it. If there's no trash can, he will stick it inside his door panel. And he'll have just his door panel filled with other people's trash.
So your car needs to be cleaned. Probably.
My car needs to be cleaned.
He does.
Yeah.
But it's just funny because it's not his trash. It's other people's. Even if I've done it, there's been some times that something will fly out of my hand. He'll grab. No, Davy. It's windy, and he will chase it. And I'm like, oh wow, that was a lot more energy than I was willing to exert.
This is my exercise for the month.
Seriously though.
He just chased down my trash. I feel like a horrible human being right now. Thank you, John.
Yes.
I feel that big.
Nice things that I do. Make people feel that big.
Seriously.
But the planet really appreciates that.
No, that's good.
Yes.
Whether it's like, go John.
We're all in a simulation. The planet doesn't matter.
I mean,
That
you
is a
know,
possibility.
it's all a point of view. It's all a point of view. Well, thank you guys for being with us today. And
Thanks for inviting us.
and being awesome. So until next time.
All right.
All right.
We'll do it again soon.
Okay.